You're good, Terry. Okay, we ready? Let's call this meeting to order. Please stand for the Pledge of Allegiance. Ready? Salute. I pledge
Allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, at this time, there's an opportunity for public comment. Is there anyone in the audience that has some comments they'd like to make? Seeing none. Cool.
And there's no online, Mr. Chair.
Oh, thank you. Okay, so we'll move to agenda item number 4, welcome and introductions. Janice, can we start with you? Just introduce yourself.
Just really quick, we do have a new member, and that's, I think, the purpose of the introductions. And so we'll get to Joe here in a second, but go ahead.
Janice Gomes, District 1.
Wayne Chapman, District 2.
Next time, District 4. Terry Flanagan, at large.
Joe Moreno, District 3.
April Molina, at large.
And then staff, Troy McNeil, Deputy Director, Fiscal Supervisor for MCTC.
Sandy Ebersol, Administrative Analyst, MCTC.
Anyone in the audience care to introduce yourself?
Sure. I'm Jared Carter. I'm Deputy Public Works Director for the county.
Okay.
Colston, Administrative Analyst, City Mayor Intern Department. Normally you would see Ellen Bitter, she's our Deputy City Chair. She's at a special counsel.
Thank you and welcome.
This is Alexis Raimundo, Assistant Engineer for the City Mayor Engineering Department as well.
Welcome. Okay, so we have item number 5. If there's anyone that has any public comment on agenda items, please just raise your hand. We have approval of minutes for January 10, 2024. Has everyone had an opportunity to read the minutes? All right.
I move we accept the minutes.
Is there a second?
Yes.
All in favor?
Aye.
The chair is going to abstain because I was not present at the meeting. So motion passed, minutes are approved. Okay, now item number 6, Measure T financial statements. Where are we going to begin with this?
We were going to start with Chacho because he has to get off. With Jason.
Yeah, if we can, Mr. Chair, there's been a request to move things around due to the availability of staff for the presentation. If we can go to number 7 for one presentation from the city of Chowchilla.
Okay.
And then we'll move back to 6 with the auditors, just so that the staff person had a prior commitment, and we want to make sure they have an opportunity to give their presentation.
Very good. We'll leapfrog to item number 7, a local agency update. Who's presenting for that?
Jason Rogers? Jason, are you there?
Or unmuted if you want.
Looks like we lost Jason. You're going there. It's for public comment. Looks like we lost Jason. He's not online. And so in the interest of everybody's time, we can just go back to number 6. I apologize.
No problem. Okay, we're back at number 6, Measure T financial statements. Where do we begin on this?
Yeah, so with us today are some representatives from 3 different accounting firms that worked on the 4 different audits, one for the Transportation Authority, and then one each for each of the local jurisdictions, the County of Madera, City of Madera, and the City of Chowchilla. We'll go ahead and start with the authority audit. And so I believe Osvaldo from the Price Paging Company is here to present the authority audit, and then he will also present the City of Chowchilla audit. And then we'll proceed from there. So Osvaldo?
Good evening, everyone. Can you hear me okay?
Yes.
Alrighty. Thank you. I will keep this presentation brief because I know there's a lot going on. My name is Osvaldo Gutierrez. I'm an audit manager with Price Paging Company. Fausto Hinojosa is the audit partner on this engagement, and he is out of the country, so I am here in his stead. So he's the lucky one, and I'm the one that's here. So this is for Measure T specific to the city of Chowchilla. And if we can go to the next slide, please. This is something we always want to hit at a very high level because there's always new board members in place, and or it's always good for everybody to be aware of the overall high level process. So very briefly, audit process, here to assess risks of material error and fraud. For us, it's important that every board understands that we're not here to do a forensic audit. So if we were to look at 100% of every transaction, we'd practically be there all year long. So that is not the best way to do it, and that's how it's done. So we look for big items and items that are identified as a higher risk, or for whatever reason we need to select, and that's what we focus on. Obviously, we've done these audits for years now, so we continuously update our understanding of operations, and critically important for us to continuously review internal controls, because it's one thing to have good rules and regulations and controls in place, but it's another thing if they're actually operating. So we have had clients where they're very sophisticated, great policies, but they don't follow them. And then when that happens, it's a disservice to the entity. So for us, we always have to come in with a fresh mind and fresh team members to always do this. And then we obviously develop our procedures to do what we need to do to give you the audit opinion. Next slide, please. For us, these audits are performed in accordance with the AICPA and government auditing standards. There's definitely a lot of rules and regulations over all of this. So in a way, we're holding you and us at a higher level, which is tough, but I guess this is what we do. Financial statements are fairly presented in all material respects. That's important because my earlier example of getting everything down to the penny, the dollar is not realistic. A lot of times it can be, but for us, it's important to ensure that you understand that. We'd like to report that for this and the other audit that we're going to present. Clean opinions, unmodified, that's the best grade you can get. So that's something to note. It is important that we acknowledge that the accounting policies and procedures that are in effect have been consistently applied, which is critical, because when things are not up to par, that raises red flags for us, and then that's what we need to investigate further if we need to. And really important for you as a board to understand, the financial statements include the note disclosures. So you have a balance sheet, income statement, and all key data, but the notes help really explain those numbers. So there's a lot of valuable information from reading the whole thing, and we're happy to answer any questions if you have them after the presentation. Next slide, please. Big picture, I took a screenshot of the balance sheet and income statement because it's one thing to go over everything page by page, but for you to understand is it's always nice to pull it back and see what's going on. So for Chowchilla, $1.7 million of cash and investments, and the biggest liability / deferred inflow is the unavailable revenues. So essentially revenues that are recognized at a later time due to timing, but nothing too crazy here. If you go to the next slide, please. This is where year to year on the income statement, you'll see a lot of the core activity of what's really going on. So this is always interesting to see the story of what's going on. So for this, Measure T sales tax obviously is the biggest revenue item, $786,000 with interest and gain loss. But expenditures, you'll notice it's $35,000, and that's just what happened during the year. So there's going to be a larger net income, quote unquote, of 790,000. Less transfers out. I believe that went to the city for streets and roads. The staff can confirm. So bottom line is there's a net change in fund balance of $425,000. Next slide, please. As part of the audit, we always issue what is called the Government Audit Standards Report. That's at the back of the financial statements. But in summary, for us, if there's any issues related to internal controls or internal controls over compliance, it's important for us to acknowledge it here. So there is nothing that we need to identify or report to the board. So that's great, and it's commendable to the staff on hand for what they did during the year. We have given multiple findings to a lot of clients, and when we do, we report them here. So just wanted to let you know that's commendable. Next slide, please. And then the final slide, it's important for us. We have this in a letter to you, but it's good to talk it through because if you have questions, we're happy to answer them. But significant accounting policies, no changes. Estimates that are huge, nothing that we need to report. Nothing unique or sensitive or no disclosures. No difficulties encountered in performing the audit, which it's kind of funny. I'd say the past 2 years, we've had to write some clients up for that specifically because they can be troublesome to work with. So even though it sounds like we're just giving no, those are big weighted no's. So that's good. Significant audit adjustments? No. So the books were clean, right? That's great. No disagreements with management. Significant risks related to material misstatement. There's nothing that we need to report. And obviously for any fraud or illegal acts, we didn't identify anything. Whether or not the team took $1 out of the petty cash jar, who knows? But hopefully not. So that's the end of for just Chowchilla specifically. Happy to answer any questions that you may have, or if there's anything I can clarify, please let me know.
Yes, Mr. Chair, this would be a good time if there's any questions about the Chowchilla audit specifically. This would be a time to ask those.
None, seeing none. Thank you.
Thank you.
And so we'll go to the authority audit.
Alrighty, I'm up again. So MCTA, obviously you're very familiar with it. I will not hit the same things that we talked about recently, but it's the same and or similar process. So yeah, we can skip this. For this entity, it is obviously larger, a lot more activity. This is nice in the management discussion and analysis at the front of the financial statements. You can get a nice high-level summary, and in this case, dual year, to really see what the changes are. So a lot of current asset increases, definitely a lot of liabilities, which could constitute a lot of things, debt related to your bonds, I believe. And then obviously whether or not the money is restricted or unrestricted is always categorized appropriately. So a lot of activity, a lot of action going on, but it's essentially everything related to the, what needs to be done as part of the purpose of MCTA. Next slide, please. Again, to reiterate, the income statement here, the statement of activities always does show a current year snapshot of like what happened during the year. So primarily those sales taxes are Measure T, 7.9 million. And then there is a good chunk of expenditures that were spent on public ways and facilities, and then obviously your interest on your debt. So big numbers, a lot of activity that goes into it, and the auditing that we do is for us to get comfortable with these numbers to give an audit opinion. So, I mean, I'm kind of downplaying it, but there's a lot of work that we do to get comfortable with these numbers. They're just big numbers to always talk about. Next slide, please. For us, it's always important for us to talk about the fiduciary funds as well. So MCTA is obligated to hold this money as a private purpose trust fund related to the specific purposes, which are in the back of the financial statements. But this is also part of the financial statements. So we give opinions on the main entity along with the fiduciary activities for us to get comfortable with the accuracy of these numbers as well. So we also perform our auditing procedures and due diligence over these numbers as well. So next slide, please. Additions for those other categories are going to be separately stated here. So primarily sales tax money, and then all the disbursements that are to the other entities. So that's pretty standard. And then if you can go to the next slide, please. We're pleased to report no issues to identify related to internal controls or compliance, which includes us reviewing the Measure T legislation and doing all our other tests and analyses to ensure that there's nothing here that we need to report. So that's great. Next slide. And same as the other slide specific to MCTA, there's nothing here for these items that we need to report. So again, I'd just like to reiterate, it is commendable when an entity can get this with clean opinions and no items to report because we don't take it lightly. We also sign our name on the audit report, so there is a heavy weight to that signature because if we're wrong, we can essentially lose our way of doing business. So we got to take our job seriously and do our due diligence to make sure we're giving you the best service, but also holding our integrity when it comes to working with the team there and doing our job. So props to them and thank you again for allowing us to serve you.
Thank you, Osvaldo. Just for the board's information, when he's talking about the private purpose fund or the fiduciary fund, those are funds that we hold for the local agencies. And so at the year end, there still might be some that we haven't dispersed yet. So we have to record that in a separate fund, essentially on the financial statements. And so that's what that was, just for clarification purposes. The other fund, the original one, is the kind of the general fund and the capital projects fund that the authority manages essentially, and that's what was the first one that you were showing. So just for information and clarification, in case you were wondering what all that meant. And so this would be a time to ask any questions for the authority audit.
I just want to state, it's hard to keep up with that and try to find where I can actually read it because it's hard to read up there when you've got numbers. By the time I find the number and can find which page it relates to, you've gone to the next.
Okay.
Do you want to go back?
Is there anything you want to review?
No, I had gone through before the meeting on all that, so I was kind of familiar, but I'm just saying presentation wise, hard to keep up with.
Yeah.
If I may, I hear you and I'll note that for next time. So for us, it's important that we use our experience to help decide what to hit on for these presentations. So for us as the auditors, it's really critical for us to tell you as a board about the performance of the entity, to disclose the audit opinion, to go over like this slide that you see in front of you, because that's a result of the numbers. The numbers are set, they're in those financial statements in front of you, and those are going to be there and always available. And if you have questions, the people in the room with you right now are going to be the ones that can help answer those questions that you may have. For us, we audit those numbers after the fact to ensure that those numbers are fair and accurate, and that's what we present. But either way, we apologize. I apologize for going a little quickly. I've heard multiple comments from multiple boards saying they don't want to even hear that level of detail because they've seen it already. So now that I know that, I can work on that next time.
Thank you.
Before you go, I have some questions. And I understand you're the CPA, so if you're unable to address them, I think that Troy would be next in line.
Yeah.
So I'm looking at the MCTA audit, and on page 36, it shows tax revenues of 16,263,000 and change there. And if you go to page 8, I'm trying to reconcile this. Page 8, it shows sales tax of 7,909,000. On page 20, it shows 8,083,000. And then on page 33, it shows, these are all sales tax. It shows 377,719. So the grand total of that I got is 16,370,707. And that's out of balance. It seems to be a discrepancy somewhere around well over $100,000. I wonder if we could explain that.
I wasn't quite following where you're getting all the numbers, but without getting into specifics, sometimes there might be this in how they're presented. Is it a full accrual, modified accrual? Is it the government-wide, or is it just the fund statement? And so that can be somewhat confusing, and that might explain it, but without really getting into the specifics, I'm not quite sure how to appropriately respond to the discrepancy.
Right.
All funds have been accounted for, so I can say that with confidence.
Yeah, but what I'm looking for is balance, and I'm not seeing it. Something's out of balance here, and it's $107,000. So how can we, as this committee, be assured that everything's accurate here? That's a red flag that just popped
Yeah,
up.
so where I would need to look at this specifically as far as, where you're getting the 100,000 difference, like what are you adding up to
Okay.
get that discrepancy, and maybe I can,
Would you like me to run
And
through it
so-
again?
yeah, so to give the page numbers, I wasn't quite sure where you were looking at. Are you looking at just the authority audit?
Yeah.
That's okay, let me check.
Okay.
So he's talking about the assist.
So on page 36, it shows revenues of 16 mil.
And when you say 36, that's where I get confused is,
509.
yeah, versus, what number, where are you getting that number? The
Off.
page 36.
Off the audit.
Oh, after that one?
Page one,
Oh, you know
page
what?
119 at the bottom of your.
Oh, okay. They say, so I see page 36, that is based on a cash basis.
Cash basis, yeah, I was
That
about
is,
to say
that's
that.
the difference.
Mhm.
So 36 is a sales tax receipts, whereas everything else in the financial statements is an accrual basis. So it will be different because of the timing.
Okay,
So the cash receipts is based upon what we receive, but on the financial statement is when the actual revenue is reported per the auditing standards or accounting standards.
yeah, so
So there is going to be a difference.
is that $107,000 discrepancy, is that considered normal?
That would be probably what explains that. That would, to me, that doesn't raise any red flags
Okay,
because it's a timing difference.
okay,
So now cash, on the cash, what recorded there, and that whole page that you're looking at, page 36,
uh-huh,
is for our bondholders, because they want to know what are you actually receiving, and so they don't want to go through all this, and so they asked us to put one page to know what our sales tax receipts are. But when we present our financial statements, we have to do it on a full accrual of when it was earned. And so there's going to be some timing difference. So when you look at the calendar, like, is it here or here? And so there might be differences based upon what period are you looking at for the timing. And so I would, without going into and adding it all up, that is the difference, and it will cause a difference because of that timing.
okay, would 107,000 be considered within norms?
It all
So if
depends
I
on what you're receiving, right? Because it could be a lot higher depending on the period that you're looking at, right?
Right.
And so, and Oswaldo, you're full free to jump in any time, or any of the other auditors, but
Yes,
the state Department of, trying to think of that, I know the acronym.
TFA.
It's called the BOE, the Board of Equalization, right? Who collects the tax and then send it to us. There's a delay so they collect it, but then there's like a 2-month delay before we get it. So the receipts of when we actually receive it, but on the statements, they tell us what month that they collected it in, even though we're getting it 2 months later. So there's like a 2-month delay between that actual revenues versus sales tax receipts.
So it could swing either way.
It could swing either way, depending on the timing of the collection.
And yes, he's correct. And I'm looking at our work papers. Obviously, I can't share them with you, but that number specifically from the CDTFA, so it's the new Board of Equalization, and that represents 12 months of sales tax receipts. But a cash basis, like actual, like by month, that's how much cash they would have gotten, but that is not including any type of accruals or timing differences. So that's why those numbers will not match. Whether $100,000 is reasonable or not, that's just timing. It can be a lot more, it can be a lot less, but they do have support. And to help, I guess, quell any questions in the future, for us, again, the way I described that we are auditing and take ownership of it. So yeah, when we sign these reports, we have to do our due diligence and get supporting documentation to ensure that those numbers are accurate to the best of our knowledge. So for us, we're satisfied as a firm that that number is good.
Yeah.
Um,
And
there's more support needed. Yeah, we can definitely, you can work with management to get the actual schedule if you still are concerned, but
yes.
I see it in front of me right now. It's from this state of California, CDTFA.
Yeah, and I can show, we have a reconciliation sheet to show the cash versus accrual basis. At the end of the meeting, I can print that off for you and give it to you, any of the member that wants to see that reconciliation from the cash basis to the accrual basis that's required for the accounting rules.
Very good. Okay, I've got another issue that involves that I think I'll defer. It involves the MCTA audit, but I'm trying to reconcile numbers from all three agencies, so we can visit that after the presentation of all three. So looking at page 22, it says under note number 1, summary of significant accounting policies. Down at the bottom, it says sales tax revenues received by the authority under Measure T after deducting certain administrative costs are to be spent, et cetera, et cetera, et cetera. How much are those costs and what do they include?
So the CDTFA or the BOE, they take an administrative fee out of that as per state law, they're allowed to do that. And that's what that's referring to primarily, is they take that fee. I want to say this, for this particular period, 22-23, it was, I believe, like 140 something thousand that the state took to administer collection of all those taxes.
Okay. Okay.
Just went back to them.
Okay.
And that's adjusted every year, based upon their costs.
All right, then the MCTA has to operate within the confines of 1%, correct?
So the all the administrative items is within the 1%. And maybe I'll get ahead of you here a little bit, is there are some renewal costs that are taking off the top to pay for some of the renewal efforts as allowed by law for us to do that.
Renewal, meaning what?
To pay for, to come up with the renew, and we'll talk about that on the agenda, further in the agenda, but they help pay for, to come up with a new expenditure plan, which could include staff time. It could also, but it primarily is consultant and attorney fees.
Okay. Thank you.
And one more question. It says excess expenditures for your administration and planning on 34. What?
Is the authority audit?
Yes, page 34.
Are you referring to the notes to the budget to actual schedule on
Yes.
page 30?
You want to take that, Osvaldo?
Yes, of course. If you go to page 33, that is a summary of the budget to actuals for the general fund. So on top are revenues and in the middle are expenditures. So under administration and planning, which is the main line for expenditures, the budget was for 373,000, but the actual amount spent was 378,000. So that means there is a over expenditure amount of 4,793. And on the notes on the next page, all we're doing is we're pointing that out on these financial statements to say that that line item specifically was over budget by that amount. It's not a,
Why was it over budget?
It was a timing thing, so primarily it has to do with the renewal costs. And I believe, without looking into specifics, and we can only change the budget up to a certain date. And so we're estimating. And so this is not an uncommon thing that you might see, usually we're way under. But in this case, we were slightly over.
I mean, was it salaries? Was it?
It was probably, from what was the estimated budget, it was probably due to the consultant costs. But the consultant costs were approved costs, right? But they weren't necessarily captured in the final budget that was adopted earlier, right?
Anything else?
No, that's all.
Okay. Then there's a concern I have. There seems to be some kind of a contradiction. If you look at page 5 under financial highlights, you see that box. Let's see. It's not a box. It's under financial highlights. Draw your attention to item number 2. The authority's total net position for the fiscal year ended June 30, 2023 increased by $2.7 million, primarily because of lower expenditures on capital outlay costs. And if you go to page number 8, it says under authority funds, the capital projects fund balance decreased by 1.652 due to higher expenditures on capital projects this fiscal year. Can you help me understand that? On one hand, you're talking about higher expenditures, and then on the other hand, you're talking about lower expenditures.
I'm trying to figure out how to best explain this, because you're dealing with a lot of accounting rules in this, and there's also, remember I was telling you, there's government-wide statements, and then there's fund-specific statements, and that's kind of what you're looking at. It is possible that it could be a clerical error as well, and I'll have to double check that. But if we look at the statement, the numbers above that, the condensed statement of activities in public ways and facilities, there is a lower number in 2023 versus 2022. And so I would need to double check to see why that is. It could have been a clerical error.
Okay, when you double check it, would you email it to everyone so we know, please?
Yep.
I found those numbers on page 7 that made it match, and then 17 and 18 for that.
Yeah. So just to clarify, this section that you're looking at is the management discussion analysis section.
Mm-hmm.
And it's not specifically audited, it's just information, right? And so we work with the auditor to put it in the report, but it is management responsibility for this. And like I said, it could have been a clerical error on our side.
Yeah, we could just clarify it. Yeah, thank you. I think that's all I have. Does anyone else have anything on the MCTA?
All right. Good. Thank you for the questions. Tough questions. All right, Osvaldo.
Thank you.
Thank you.
We'll go to the next one. We'll go to the county. I believe that is Kip with HHC. Are you still with us, Kip?
Yes, sorry, I did get kicked off for a second, but I made it back in time. So, am I good to go?
Yes.
Okay. And I'll thank my friend Ozzy over from Price Page for doing all of the language stuff at the beginning. So I won't do all that with you, but I will go over my required communications with you guys as governance. So I'll be presenting the County Madera Measure T Fund financial statements for you. We did issue our report dated May 9th, 2024 with an unmodified opinion, so a clean opinion. During our audit, we found that there were no sensitive estimates affecting the financial statements. The financial statement disclosures were neutral, consistent, and clear. We had no significant difficulties encountered in performing the audit. We did have one misstatement noted during the audit, and it was for $6 million. It was just an adjustment that we made from the operating transfers in account to the advances from other funds. And that was due to the Measure T Fund requiring some temporary gap funding from the high-speed rail fund to complete the Road 200 bridge project. And so we just moved that $6 million around in there. And then, so we had no major disagreements with management. We did obtain management representations dated the same date as the financial statements. And we are unaware of any other management consultations with other independent accountants specific to this audit. We had no findings, no issues to note. And then we also issued our audit report in accordance with government auditing standards and the Measure T compliance, which does cover internal controls and compliance, also dated May 9th, 2024, and also with an unmodified opinion. So a clean opinion on that auditor's report as well. So the next thing I'll do is I'll just go over really briefly the financials of the County Madera Measure T Fund, and this starts on page 4 of our report. All right. And so you'll see you had total assets ending at about 15.7 million. That was a decrease about 1.8 million from the prior year. And that was mainly due to the use of cash investments to fund the projects in place. Total liabilities ended about 6.5 million. That was an increase of about 5.2 million from the prior year. And as you can see, it's that $6 million we added to the liabilities right there. And then with that left you with your fund balance, all of which is restricted at about 8.3 million. That was a decrease of 7.3 million from the prior year. Then that's consistent with the net change in your fund balance or your net loss in the current year. And so on the next page, page 5.
Before we go on that, I'm looking at that 6 million. It's characterized as an advance from other funds.
Yeah.
Mm-hmm.
So go ahead.
Yeah, we can, you want to address that really quick, Jared? You want to go to the podium and then just speak loud enough and then the mic will pick you up.
Yeah, good evening, everyone. Jared with Public Works. So that $6 million was actually a settlement that was awarded to the county from high-speed rail during negotiations with board of supervisors. So the revenues that were in that account were borrowed to advance the construction of Road 200 bridge project. So those will be reimbursed back to that account once the funding is available. So the purpose of doing that was to move the project forward sooner, which ultimately saved us money because we got it done sooner before things got more expensive. So hopefully that answers your question.
I think I heard the accountant say it was a gap funding or a bridge loan, essentially.
Yep.
Not an advance. It was a loan that had to be repaid.
Yeah, I mean, it's essentially borrowed from the high-speed rail account and then repaid by funds from Measure T.
Okay, all right.
So
I think it's just the terminology threw me. I looked at advances from other funds. That kind of implies that it's money that is due to the MCTA or to the county. But really it's a loan. I think it's just semantics.
sure,
Yeah.
I'm not an accountant, so I can't necessarily maybe explain that terminology, but I mean, in my world, we borrowed the money so we could advance the construction and then it will.
I'm satisfied with that. In
Okay.
simplest terms,
Sure.
yeah, it's a loan. It's a bridge loan for the bridge.
Basically, they're taking from one fund to over here, and then they'll pay it back.
Okay,
And it was just captured in that way on the financial statements.
thank you.
Feel free to add anything to that, Kip.
Yeah, thank you. It really is semantics and just terminology, but yeah, it's an advance that we paid back to that other fund. So sorry.
Thank you for the clarification.
Yeah, and I appreciate you clarifying that in there as well. And then so on the next page, we'll just go over the revenues and expenditures really quick. You can see you had revenues totaling about 4.3 million in the current year. That was increased about 259,000 from the prior year. And there was just kind of small increases in the sales tax revenues, and then there was some additional investment income this year as well. Expenditures total 11.6 million in the current year, a large increase from prior, about 9 million from the prior year. And that was just due to obviously the increase to project expenditures that we were just referring to. So, which left you with your net change in your fund balance of a loss of 7.3 million in the year. And I think there's not much to address in the rest of the footnotes here. You have your your accounting policies, some really brief footnotes that just explain the same things on these here. And then your supplementary schedules that break it down by the different categories in the end there, and then our auditor's report, but nothing else that I haven't brought up already that I think I need to bring up again. But you're welcome to ask any questions at this point.
Any questions?
No.
None? Seeing none? Thank you.
Thank you all.
All right, thank you. And we'll now go to the City of Madera. We have Sophia from the Poon Group to present the City of Madera audit. Sophia.
Hi, can you guys hear me okay?
Yeah.
Thank you. And I have presentation slides. I'm not sure if I should do screen sharing or your end can help me to pull out the presentation.
We can share them for you if you want.
I don't have them.
Oh, we don't have them?
She has to share them.
Oh, let me give you
Oh, okay.
one
Sure.
second.
Can you guys see the screen now?
Yes.
Oh, yes.
Sure. So good evening, council chair and then committee members. Again, this is Sophia Kuo from the Poon Group. I'm stepping in for our engagement partner, Andrew Roth, and then he is out of the country as well. And it's my pleasure to be here. What I will go through is the City of Madera Major T Compliance Audit for the year ended June 30, 2023. And this slide summarizes what I will go through in details, includes scope of work and then required communications in accordance with professional standards, and also audit responsibilities and our audit approach, and provide some overview of the financial statement. Last will be our audit result. So again, the scope of work is the City of Madera Major T Sales Tax Fund audit and compliance audit. We completed the audit back in March. And in accordance with professional standard section AUC 260, that we are required to communicate with those charged with governance. Here that we determine the committee members are those charged with governance. This is why I'm here today. And the city discloses the summary of significant accounting policies in a note 1 to the financial statement. This particular note is pretty important because it dictates how the city prepares the financial statements, and also to help us to determine whether the city adopted the sound accounting policy. And there are also some sensitive disclosures in the financial statement that we highly recommend the reader of the financial statements to read through them, which include a note 1. Again, that's the summary of significant accounting policies. And note 3, transfers, which is the transfer to the city's general fund for the street and highway projects. And note 4 is the restrictions, which that the city really restrict the major T sales tax revenue for specific projects. And note 5 contingencies. And there were no corrected or uncorrected misstatement reported from our audit. And from time to time, the management might consult with other accountants in regards to the accounting treatment or any other auditing matters. To the best of our knowledge, there were no such consultations, and we encountered no significant difficulties in dealing with the management. We did not have any disagreement with the management in terms of accounting policies or auditing procedures that we performed. And now I will go through some of the audit responsibilities, including both management and our auditor's responsibility. So the management is responsible for preparing the financial statement, and then we are responsible to perform the audit. And the management is responsible to present the financial statements in accordance with accounting principle generally accepted in the United States, which is GAAP. And as an auditors, we ensure the audit is in conformity with auditing standard generally accepted in the United States. And also we perform the audit based on the government auditing standards as well. And again, the management is responsible to adopt the sound accounting policy. And here we are required to communicate with those charged with governance. And the city's management is required to establish and maintain internal control over financial reporting and also compliance. And we are required to assess the internal control over financial reporting. However, we are not opining on the internal control, which means we did not issue opinions on the internal control. And the management is required to provide the evidence supporting the amounts and disclosure in the financial statements. And we are required to determine the fairness presentation of the financial statement and render our opinions. And the city is also required to prevent and detect frauds. So I will go through some high level of our audit approach. So our audit approach typically divided into 4 phases. The phase 1 is a detailed planning. We have been doing the City of Madera audit for quite some years. And of course, every year we still met with the management to determine if any changes happen in the city that we should be aware of. And also everybody probably know that gas fee never rests. So we also meet with the management to determine all the new gas fee pronouncements, whether they have any impact on the city or not. And then it will bring us to the phase 2 of the audit, which is our interim field work. It's a risk-based review of the internal control over significant transaction cycles. Typically, you will see the financial reporting, revenue and revenue collections, and also expenditures, how they record the transactions. And it will bring us to the phase 3 of the audit, which is the validating and testing account balances at year-end phase. During this phase, we also do confirmation. We'll also send out confirmations as well. And then it will bring to the phase 4 review of financial statements and issue our audit opinions based on all the audit evidence we gather. And this phase, we will also be getting the legal updates, continue reviewing minutes to determine whether any subsequent events or any contingencies to be disclosed. And now I will go over some high level of financial statement review for the City of Madera Major T fund. So this is a snapshot of the balance sheet. So the total asset ended with almost 16 million, net with liability about 11,000. And also the deferred inflow of resources, which is timing issue, 1.7 million, the revenue that the city didn't receive within 60 days. And that brings the fund balance to be $14.3 million. And the city properly classified as the fund balance as restricted fund balance, which came from the external restrictions.
Excuse me. I just noticed that there it says Dan Metz.
Yeah, we'll when we get to at the end, after we go through, then we'll open up for public comment.
Okay.
Yeah.
Okay. And this particular slide shows the change in fund balance, which is also known as income statement. So the revenue recognized in current fiscal year was about 2.6 million. The expenditures is 221,000, and the transfer out was about 900,000, which is transferred out to the general fund. And that result in a change in fund balance by 1.5 million. And this will bring me to the audit result. So we are happy to say that we issue a modified opinion, which is the best opinion that the CPA firm can render. It's also known as a clean opinion. That means the financial statements are fairly presented in all material respects. Accounting policies has been consistently applied, or the estimates are reasonable. Disclosures are properly reflected in the financial statement. So again, there was no disagreement with the management, no findings issue, and no accounting issues noted, and no inappropriate accounting activities were noted. This will conclude my presentation for tonight, and I'll be happy to answer any questions that you may have.
Any questions for the city Madera?
Well, I have a question, but I don't think the CPA can answer that. Is anyone from the city of Madera here?
Not from the finance, but we can try and answer.
Well, I just wanted to know on page 20 of the city of Madera, it shows under expenditures, public ways and facilities, $2,578. And then on page 24, it under expenditures, it says highways and streets, and the sum total appears to be 221,229. What's the difference between those two things, if anyone knows?
If you look back on page 20, for total expenditures, it equals the 229. Because you have public ways and facilities and you have capital outlay. So public ways and facilities is usually something that has to do with like an expense versus a capitalized expense. And so usually larger projects, if it's a capital project, they have to be, then that they call that capital outlay, because a road is an asset. And so depending what type of treatment or what type of work you're doing on it, it's either an expense or it's capitalized and considered capital outlay. And so if you look under total expenditures, 221, 229, that equals the amount on 24.
Okay, so then just to refresh, public ways and facilities, give me an example of what that would be.
That's usually your, I'm not a public works person, but that's usually your general maintenance costs of the roads. And any of the public works folks can correct me if I'm wrong, but usually your basic seal to maintain the road, seals and whatnot. But if you're doing anything to extend the life of the road, that would be a capital outlay.
Okay. All right.
Is that the general good way to describe it?
Yeah. Okay, that's all I had on that. Mr. Metz.
You want to share? No more questions?
Any questions?
Open up for public comment?
Yeah, I thought he had comments specific to that agenda item, but I'm really not sure. I just saw his name up there.
Yeah, we'll allow Dan to ask a question or make a comment. Go ahead, Dan, you're allowed to speak.
Thank you. Can you hear me now?
Yes.
First of all, let me say I'm extremely disappointed that I was not allowed to speak during the general comment period. I've had my hand raised since the beginning of the meeting, and in an hour in the meeting, I'm finally recognized.
Mr. Metz, this is Terry. I'm going to apologize. We're under extraordinary circumstances. There was a technical difficulty here, and I'm not used to. I saw your hand, I think, when we got to, well into the agenda. That's the first time I saw it. So I'm not making an excuse. I'm just apologizing for it. But you're welcome to state what you would like to state and speak as long as you would like to speak.
Well, what I was going to say during the general comment period was that I apologize for not being there in person today. There was a fatality on Highway 41 between El Cid and Bass Lake Turnoff, and it blocked me from getting out of my community. I could not get to town. I could not get to North Fork. I couldn't go either direction. So I apologize that I'm not there, but it does speak to the importance of fire evacuation routes like Road 620, which has been on the list for many years. And I know that's not within the purview of the COC, but it is something of interest to us here in the mountain community. In the city of Chowchilla, I was going to ask a question about the $34,000 expenditure and the transfer out. So what is the difference between the $34,000 expenditure and the transfer out? I think it was $700,000. I don't remember now.
So, Mr. Metz, do you have your copy of the Chowchilla audit?
I do. I can try to pull it up, or I
I'm
can.
just trying to get a page reference for you.
Yeah, I understand.
I found it.
Okay, we got it, page 6. Okay, so we have a question is,
Do you want to have them list all the questions, or do you want to answer them as we go?
let's answer after they're asked.
So usually in Osvaldo, if you're still there,
Yes.
so you can correct me, if I misspeak, but usually when it transfers out is they're probably recording the expenditure in a different fund, and in this instance would be like a road fund, and they're transferring money out of the Measure T fund to pay for eligible street maintenance costs that they're capturing in their road fund. Is that a correct characterization, Osvaldo?
Yes, if you look at page 10, it discusses transfers. So yes, Measure T fund transferred $365,000 to the Streets and Roads Fund for the LTF related to street maintenance and operational costs. So yeah, it's within the city of Chowchilla. If they have allowable expenditures that can be used to spend Measure T, and it's not always pertinent to report it in these standalone financial statements, because there's other reasons for that, they can transfer that money to spend it in another related fund. So that's that transfer. And then to your earlier question about what makes up the $35,000, that I don't have in front of me, but it is classified as highway and streets. So it could be specific to just Measure T, the Measure T fund for Chowchilla.
Okay, it's a little bit confusing about why some of the funds are spent and some of the funds are transferred out. What's the difference between those two categories? And maybe it is what you just said, that some of the funds are spent as a Measure T project, and the other funds are simply transferred into the city general fund or road maintenance fund, whatever. So that's probably pretty good.
Yeah, so to clarify, it's being transferred to the Streets and Roads Fund. But yes, management has discretion to decide how the expenditures are spent and where they're spent, and we're here to help get that information and report it accurately. So if there's a specific question of why they chose to transfer it, whether there was no allowable projects specific to Measure T, yeah, that's beyond our knowledge base and purview.
Okay. Then the next question was on MCTA. under the administrative category, there was a $378,000 expenditure, which was a little bit of an overrun. If I'm not mistaken, and maybe you can help me clarify, Troy, that $378,000 is primarily $360,000 that was used for the consultant in the steering committee and the development of a new expenditure plan.
So probably about half of it was for the consultant. I don't have the specific numbers in front of me because the 360,000 was over more than one period of time. The 360,000 actually is going to be captured in 23-24. So what you're looking at is previous expenditures from fiscal year 22-23, which is part of the 22 effort.
Yeah. You're right. I'd forgotten about the timing on the consultant charges. I think they were hired in September or anyway in the current fiscal year, not the fiscal year in question.
So for this period that you're the 370,000, I would estimate approximately, you know, half of it, if not more than half, was consultant costs, and the rest of them are normal administrative costs from auditors and then salaries.
Right. Okay. I think that that's all I can remember that I have at the moment. So thank you very much.
Nothing further, Mr. Metz?
I have a question, but I'm not sure it is appropriate to ask right now. My question, and maybe you can just put it in the hopper and take care of it at the appropriate time. We have 4 audits and three different auditors. Who is responsible for ensuring that those 4 entities, those 4 audits are synchronized? And who is responsible for making the decision about who is responsible for making sure those audits fit together? Does that make sense?
Yeah, I understand it, Mr. Metz, and it's something that I've wondered myself.
So
go ahead, Troy.
So just to quickly comment, in the past, there was essentially one auditor that did all 4 audits. But what we are running into is because that auditor may not necessarily be the auditor for the city or the county for their thing. And so they were always having to wait for their independent auditor to complete the work before our auditor could go in and do these Measure T audits. And so in the spirit of trying to get things done sooner and quicker, if you remember when we met last year report, there was a huge delay and we noted it on our annual report. We talked about it. And so in the effort to try to get things done quicker, we talked with the local jurisdictions about having their own independent auditor complete these audits. So they do reach out to me if needed from those auditors. I've received maybe 1 or 2 emails just from clarification on some things. And then they do submit them to us, to the authority staff, MCTC staff, to make sure that they're complete. And so we turn them in and then we submit them back to you for review. So there is some level of coordination. However, the financial statements and the audits for local jurisdictions is on them. It's on the management and their auditors to complete it in time. We're asking them to have it done by this date so that we can get our work and you and the committee can do their work and issue their annual report on a more timely basis. And because we've had some issues with that. And so that's why there are 3 auditors for this go around compared to 1 for all the previous years. I don't know if that fully answered your question or not, Dan.
No, it didn't. The question is, who is responsible for ensuring that the audits are synchronized? And that is that there aren't any discrepancies between the audits or that the discrepancies are resolved. Who is responsible for doing that? Is that the COC? Is that the MCTA? Is that,
So if there are any issues, then that we would take note of that and follow up with that, and we would discuss it here with the COC and with the authority board. And then we would follow up on that depending on what the issue is. We haven't had any issues, and so I can't speak of any from a historical context of what we've done because we've never done it. We've never had to do it because there has never been any significant accounting issues or any issues that have been raised by the auditors. But it would be the authority and the authority board to follow up on any issues. Any of the auditors still online, if they want to also respond from your point of view, part of their job is to be independent. They're supposed to do independent work, and so if they're contracted to do an audit for a specific entity, they're not necessarily. They have to be careful to make sure they have independence as far as coordination goes. If you notice that the formats are similar in nature because there is standards on what is required to present. And so the information they might present the tables differently, but in essence, it's the same information in all the audits.
so I think your answer is that the MCTA is responsible.
The authority, so if there were any accounting issues, the authority board would then have to follow up on that. Again, that's never happened, but if it did, then that's where I would start. But the COC would definitely be involved in that discussion.
Okay, thank you.
Mr. Metz, do you have anything further?
No, that's it for now.
Okay, well, on behalf of the committee, please accept our apologies for the technical difficulties. I'm sincerely apologize.
No problem.
Thank you. Okay, where's that bring us to now? Is that
Item 7.
agenda item 7? Is there any comment from the public on agenda item number 7?
Item 7 is the presentations.
Yeah.
So, do you want to do Chowchilla first? I'll do it. We'll do Chowchilla first. Jason sends his apologies. Not sure what happened. He did send a note saying that he lost connection and he had a prior commitment that he had to go attend to. And so I can attempt to give his presentation. I've reviewed his slides. So we'll pull those up. Oh, Jason, I see you're there. Go ahead, Jason, if you're.
Hello. Sorry about that. Mine's starting just a little bit late, so I can go ahead and kind of go through this with everybody there. And so, can you hear me okay?
Yes.
Okay. So yeah, this is similar to the presentation that we presented back in January. Just with some future projects that we are looking to put into our upcoming budget. So a basic overview of the city. We have about 63 miles. Current PCI is 60. That may change. We do have that in our upcoming budget to go out and redo our pavement management program and do a reassessment of our roads. We like to try to do that every 5 years or so, make sure that we have the correct number so we're making the correct decisions.
Yeah, Jason,
yes.
Excuse me, could you explain what PCI is for the benefit of everyone that's here?
Yeah, so it's PCI's Pavement Condition Index. It's essentially a health rating of a road. So the better your road is, the higher it'll be. Typically, a brand new road will be in the 90s, and then further on down. And the statewide average, I believe, is about 63, 65, around there. So we're just slightly under that, but this also calculates per year. The program that we use automatically starts reducing based upon conditions that are common to streets. So while it's showing about 60 right now, a reassessment will give us a more accurate rating, which is why we like to update every few years or so. And then next page, please. So yeah, these are some of our past projects that have been completed before. In the past few years, since I've been there, we have the Fuller Neighborhood Pedestrian Improvements Project. That was a complete streets project between a couple of our schools. Wilson School Pedestrian Improvement Project. Once again, that was a complete streets project, and complete streets project means that you're doing road improvements, you're doing curb gutter, you're doing sidewalk improvements, ADA, access ramps, that type of thing. And then we also have the 5th Street Curve and Road 16 project that was completed a few years ago. We even partnered with Madera County on getting that complete road through Chowchilla completed. That's a high access road. Then last year, we completed the Humboldt Avenue Road Rehabilitation Project. This was a complete streets project and a storm drain project. So while we had the road up, we put in storm drain infrastructure as well. That way we can divert any potential flooding and then also help with the condition of the road in the future. And then just this past summer, right, Troy? I think the environmental phase of the roundabouts project was completed, and Caltrans is currently in the design phase right now. Next page.
Where's that roundabout going to be located?
That will be on the overpass and the 99 and 233 Robertson overpass. So the roundabouts will be on either side.
Yeah. Interesting. Okay, thank you.
Yep. So, and then once again, here's kind of an overview of the Humboldt Avenue Road Rehabilitation Project. It's probably the largest project that we've done since I've been with the city. About a $3 million project. We used about $80,000 to offset additional funds, some matches from state funds, LPP, other funds that were on their LPP's local partnership program. And like I said, we completed this back in August, and this has been a great project for the city of Chowchilla. Next one, please. And then the 233-99 interchange project, as I said, this will be roundabouts at the interchange on the overpass, on both the interchanges on the overpass, in addition to another bridge going across that will allow for additional ADA access. And this is a multimodal access project. So we're trying to address several different things, bike, ped, and traffic with this project as well.
If I could jump in real quick, Jason, on that.
Yes.
As any of these larger projects, we have to leverage funds because usually there's not enough. And so we've been trying to get other grants, and we're hoping that the Congressman Duarte nominated this project for some federal money. And we're hoping to, in the next appropriation cycle, find out about that project if we receive some federal funds. And then we're also going to be applying for a a state local partnership program fund. And those grants are only available to those that have a sales tax measure like a Measure T. So we'll be applying for that as well. Hopefully between those two funding sources, it will fully fund the construction phase of this project.
Yes, thank you, Troy. All right, next slide. And this is just kind of a engineering design. This is the draft design of kind of what we're looking at, where those roundabouts will be and that secondary bridge crossing going over. And next slide. So this is an overview of our Measure T funds that we collect, the different categories that they are in. And altogether, we have about 700,000 that we receive that can go to the various categories. Next slide. So one of our large ones, of course, is street maintenance, general street maintenance, pothole patching. And it's about 300 or so thousand that we use regarding this, and represents about 35% of our staffing for our streets department. Not only staffing, but our relative costs, patch material, that type of thing. And so it's a significant contributor to general street maintenance. Next slide. We have the Clean California project that we are receiving Clean California funds for. This is beautification of the median over by the Union Pacific Railroad, along with some curb outs along Robertson Boulevard to create additional safe passage for pedestrians. And this bid will be closing this Thursday. And then we expect this project to be moving forward within the next couple months. Next slide. Chowchilla Boulevard reconstruction project. That project is currently ongoing right now. We have a contractor that is out there, started last month. Expected completion on this is in August. And this is going from Avenue 24 down to about a little past Avenue 24 and a half. And we're using about 400,000 of Measure T funds for construction of this project. We're also using this in conjunction with another project, a water infrastructure project. So as we're doing this project, we're also putting in some water infrastructure. Measure T funds don't pay for that water infrastructure, by the way. Just want to clear that. It's just, I just wanted to show how when we do these projects, we like to try to combine them with other projects. So that way we get the most bang for our buck. Next slide, please. All right, here's some of our upcoming projects that we have listed in our upcoming budget. And next slide, please. So this is the Chowchilla HSIP project, or Highway Safety Improvement Program project. And this is at various intersections to add lighting, install additional stop signs, other intersection warning, regulatory signs, marked crosswalks, rapid flashing beacons and everything. The goal of this is to create safer intersections. And this is determined by a local road safety plan that we have to have in order to apply for this, which identifies high-risk areas. Currently, we're using a portion of Measure T funds, ADA funds, to cover design costs and cover the match that we have for this. And once we get that fully designed, then we'll be going out for bid, and we expect that we should be going out for bid for construction sometime next year. Next slide, please. Avenue 24 reconstruction project. This would tie into the current Chowchilla Boulevard project. And the design has been completed on that. And we expect to go out to bid next year. And we have about 189,000 of Measure T funds allocated to this project. Next slide. And then I talked about the Humboldt project earlier. The amount of funding that we had at the time, we weren't able to go further. So we have from about 3rd Street to Front Street that hasn't been completed yet. So we really want to complete that street and get that done. So we're looking forward to doing the design on that project and then going out to bid on that. And it's one of our needed roads with the low PCI. Next slide. Transit has a portion of Measure T funds as well, which they'll be using their funds towards the purchase of a new CADX bus. And next slide. And this is just a sample of what our CIP program looks like as it relates to Measure T funds. Our CIP looks out about 5 years. And so we try to program for that time frame. And that way we have an understanding of where we're going with our Measure T funds. And so you can see current or future projects that I just talked about, plus some additional ones that maybe not showing up in my slides will be part of future budgets. And next slide, please. And yeah, so the city is going to continue to use Measure T funds to go after additional grant funds, state funds, federal funds, use them as a match and continue to use Measure T to improve our streets and transportation needs. And so with that, I'll be happy to answer any questions you may have.
Any questions? I have one quick one. That bus that you purchased or intend to purchase, is that an electric bus?
No, not yet. That's not an electric yet. We don't have the infrastructure for that yet. I believe this will have to be the last bus that we purchase that is not electric. Because we're a smaller city, and I'm not a transit person, but I believe they told me that we have an additional year or two before we have to start converting over ourselves or purchasing electric. So this will be the last gas purchase before transit has to start moving towards electric.
Thank you, Jason. Then on the slide after that bus photograph, you mentioned CIP, the acronym CIP, I think it was. What is that?
Sorry about that. Capital Improvement Program.
Okay.
So we take all of our infrastructure needs throughout the city, whether it's roads, buildings, and we put it in a document that gives us a roadmap for our next 5 years.
Okay, I appreciate that. Good presentation, Jason. Thank you.
Thank
Any
you.
more questions? No? Good deal. Okay.
Thank you.
Thank you, Jason. Does that bring us up to City of Madera on the local agency update?
Sure. Yeah. Yeah. Right. Good evening, committee. My name is Alexis. I'm representing the City of Madera. It's just a point of just make sure you speak loud. So the mic will pick you up, but just you can speak loud. Okay.
So, the city's pavement management program, PMP, the city has been working on to obtain and to implement a new, pavement management program, which is the PMP. This year, we actually hired a consultant, do the survey for the streets for our materials, collectors, and residential. This will be the first time in a while that they have surveyed the residential local streets. All 30 needs have been analyzed by the city's consultant and report detailing the average pavement condition index that has been delivered to the city. Projects to rehabilitate streets were paused until the survey of the streets were complete. With the data of the PMP in hand, projects will resume and modifications to projects will be made as needed based on the street's PCI ratings. And the PCI is the pavement condition index. An updated PCI of the entire city network. Previously, before, back in 2016, the consultant who did the survey for the PCI, the collectors and arterials were 68. Just only collectors and arterials this year, we did the whole entire network. We got an average of 61. But just to compare it from 2016, we were average at 65 for arterials and collectors. So it's pretty good standing from 2016 to 2024 to compare the arterials and collectors. As you can see in the table, we have a list of the arterials, PCI, the collectors, and residential with the total as well at 61. Next slide, please. This is a sample network of the PCI report. The consultant that did the city Madera survey is also the same as the Madera County. So here's kind of the sample report of what they give us: the street name, location, the type of street, and the length and the ratings, which will be all the way to the end, which is a score between 0 to 100. Of course, 0 being the worst and 100 being the best. Next slide, please. And here for the fiscal year 2024, 2025, commute. Next slide. R10 is the olive widening project. It has the funding measure T of 4 million, RSTP about 1.5, LTM was about 1 million, and the development impact fee. About 2 weeks ago, we had the bid opening for this project. I'm not sure who won, but it is already moving on forward. Next slide, please. The R79 project is the road maintenance and rehabilitate program for projects, the series overlays. This is for fiscal year 21-22. This project has been on hold due to the words waiting for the report from the consultant, which we have now, and it will continue moving forward, hopefully this year or not next year. These are the streets that are selected and the type of treatments that each street will receive. We will of course do update ADA ramps as well to keep them up to compliant. And as mentioned, project was delayed while waiting results from PMP process, which we have now. R81, City Streets 3 and R and 88 projects. There's also another project for the 2022 and 2023 fiscal year with the funding with Measure T with about 750,000, LPP 334,000, and the CRISA funding.
What are the acronyms LPP and CR? Or S?
The CRISA,
CRISA is COVID money, and LPP is the local partnership program. It's part of SB1 gas tax program, and we're only eligible to get that because we have this Measure T.
Okay.
So it's state funds.
Okay.
Correct.
Thank you.
Thank you. And for this project is about 2.5 lane miles of resurfaced roadway. Project was delayed as well, but now it will continue forward going on since we do have the results from the consulting with the survey data. Next slide. RE7, which is an Almond Pines Stadium traffic study. It does have the funding for Measure T, about 84,000. We do have one of our assistant engineers working on this study. It's almost in the final study, which is near completion. After that, we will have, I forgot which project it was. I can't remember off the top of my head. RE2, correct, which will connect Stadium and Pine right there by, what is it? by the high school, by the, South High School. Next slide, please. TS32, which is a traffic signal project on B Street and South Street traffic signal. The funding is Measure T, about 75,000. The CMAC funding, about 308,000.
Let's stop you there. CMAC stands for Congestion Mitigation Air Quality. It's a federal grant.
Okay. And LTF?
LTF stands for Local Transportation Fund. It's the 0.25% of our state sales tax that comes back to the county for transit and road purposes.
Thank you.
Thank you.
Traffic signal project designed to improve traffic flow at congested four-way stop sign. Project needs to be rebid. Bids received were 2 costs. So this one says funding for maintenance and rehab, flexible funding for all transportation purposes, and ADA. Next slide, please. R80, which is the Armory Seals and Overlays Fiscal 22-2023 project, has Measure T funding as well, with about 1 million, and Armory funding that was given for about 1 million as well. Approximately 2.9 lane miles of resurfaced roadways.
Armory.
I was more concerned with Mr. Dan. He raised his hand.
We'll get after the presentation.
Trying to keep him happy.
And projects delayed while awaiting results, which we do have already, so this will be moving forward as well. Next slide, please. So street chip seals, patching and maintenance, patching street maintenance, we have about 575,000. Measure T is 40% of the annual streets department budget. Mostly the public works department does the patching. I believe they have a contract with Sealright, which is a company that does the patching around the city. Next slide, please. R99, which is a citywide street project with about 2.4 million in funding, which is Measure T as well. A list of the locations has been drafted but not yet finalized. Design for fiscal year 2023-2024 and construction for fiscal year 2024-2025. Next slide, please. SD21, which is a storm drain project. Howard, improvements for design. Measure T, that's about 400,000. The storm drain funding is about 270,000. Will install approximately 10,600 linear feet of storm drain pipeline, associated manholes, and stormwater inlets and outlets. Will be installed along Howard Avenue, Granada, and West Almond Avenue. Will alleviate flooding issues that occur along Howard Avenue. Next slide, please.
Did you need to go back? Sorry.
No, I just saw it. That's right outside here,
Yeah.
isn't it? That's why you're on the second floor.
Quite a day too.
So ADA improvements. We have 2 projects, R58, construction of sidewalks on Schnorr Avenue from Sunset to Riverside, and R93, installation of sidewalks and ADA compliant corner ramps at Washington Elementary School. The images above actually are for one of the projects that for CDBG, which is the Community Development Block Grant. Correct. Thank you. So the image I actually took right there, which is kind of the cars, I guess they move. You can see we had a sidewalk and the curb ramps all the way to the other street, which is on Maple and Santa Cruz Street, which is in the city as well. Next slide, please. So for fiscal 2024 and 2025 environmental enhancement, we have the alley projects, alley 04, which is paving various alleys locations in the northwest of the city, alley 05, which is also paving various locations in the southwest of the city, alley 06, which is paving in the locations in the northeast. The reason why it's broken, I broke it into quadrant in the city, so there's 4 quadrants in the city, and we kind of rotate. Each section has their own alleys, and we kind of determine the list by that. R58, the construction of sidewalks on Schnorr Avenue from Sunset to Riverside, and R93, which is installation of sidewalks and ADA compliant corner ramps at Washington Elementary School. I just wanted to know, we actually are adding sidewalk right here along Schnorr here as well. I know we're missing sidewalk from here to Sunset, so we'll be adding sidewalk as well on that as well. Next slide, please. And for fiscal year 2024-2025 transit enhancement, Trans 12, which is the bus shelter relocation project. Bus shelters will be relocated with the implementation of revised transit routes. Shelters that discontinued shops will be relocated to stops that are still in service. Next slide, please. For future fiscal year projects, the following projects are currently planned for the upcoming fiscal years. R46, which is a Lake Street widening. Lake Street will be widening from 4th Street to Cleveland Avenue, designed fiscal year 2025 and 2026. Utility undergrounding fiscal year 2026 and 2027, and construction will be fiscal year 2027 and 2028. Next slide, please. R50, which is a Pine Street reconstruction. Pine Street to be widening from Howard Avenue to 4th Street, designed for fiscal year 2025 and 2026. Construction for 2026 and 2027. R54, which is the Cleveland Avenue widening, widening Cleveland Avenue from Schnorr to the 99, SR 99, designed fiscal year for 2025 and 2026, and the construction to begin in fiscal year 2027 and 2028. Next slide, please. RE2, which is the Almond Avenue, Pine Street to Stadium Road, which is where we connect the whole road right now. Right now, there's no existing road, but we will be connecting the Pine Street to Almond and Stadium here. We'll extend Almond Avenue west, filling the gap between the Pine Street and Stadium Road. Traffic studies are currently being done for this project. Next slide. Any questions? That I'd like to answer.
You have a hand raised, Mr. Chair.
I actually have a question. It's more of a curiosity. Where did the COVID money come from? For roads? Like,
Yes.
I'm just curious, like, how did that happen?
Yes. So there were a couple of different, I think there's like 3 different COVID bills that were passed, and they call them COVID. They all have their own names. We have the CARES Act. We have the American Rescue Plan. We have the CRISA, which is the coronavirus something act. And so within that, they allocated money almost across the board to all the departments, the federal departments, including the DOT, Department of Transportation. So within that, they allocated funding to certain programs. And so I believe we received, we put some money, COVID money on the State Route 99 Avenue 7 to 12 right away. And then some of the money went to the local agencies. A couple $1 million went to the local agencies. And the Madera looks like it's putting it on that one project. Chowchilla also in their presentation also mentioned that the CRISA money that was going on one of their projects, and the county used it for, I believe, 7, if I'm not mistaken. And so if you remember back, 15 years ago, we had ARA money when we had the first downturn. They passed the American Recovery Act funds, and there were funds for transportation in that as well. And so we don't always hear about those things in the public or in the news. Sometimes you hear about other things, because we had that banking crisis and that was going on. So all this money went towards that. But there was also money for infrastructure and transportation. And MCTC was allocated some money just like this go around as well.
I had a question. On those street widening, that can require eminent domain or?
That's a great question. I might have to get back to you on that. I'm not currently working on this project. We have the other engineers working on that can probably answer that best. I don't believe so, but I don't want to say that I promise or a guaranteed answer. Just I can let Ellen know, which is our supervisor. She can get back to you on that.
Are you specifically referring to the Cleveland Avenue widening project?
Lake, I think.
And Lake?
Yeah.
I know for Cleveland, what I've been told is they're not anticipating to take very much, if any. They're trying to do it within the existing right of way that they have, that the city controls or owns, to widen. But if they do, the process is to always work with the owners, the landowners, and then if they can't come to an agreement, then it does go towards they have to take that official, legal action.
Right, yeah,
It goes through a court process
Right.
to do that. They always, my understanding is they always try to avoid that if at all possible. Because it can get expensive because then you get lawyers involved.
yeah, timely, yeah.
Will that Cleveland widening affect the godforsaken intersection there
The
on
function
Gateway?
junction?
Yes.
It's not going to address that intersection. But I know that intersection is in the city's plans, future long-term plans. It is something that we all recognize that something needs to be done. It's just a matter of what and how do we afford it? Where do we get the funds to do it?
COVID.
Yeah. We need another pandemic.
Yeah.
Because they're projecting over $100 million just to do something like that. Because you have the railroad
Yeah.
and all that stuff, and so the best thing is to do some type of a overpass to go over the railroad that eliminates that intersection to go through those railroad tracks. So
So Shaw has one that goes under.
and I know that's been I've heard that's a possibility, but they're still long ways. They'd have to do environmental studies, see what's feasible.
So I just need to keep avoiding it, is what you're telling me.
Ellis Street overcrossing.
Yes.
Measure T project.
I know, I love that overcrossing, just so you know.
Mr. Metz?
Go ahead, Dan, you're unmuted.
Okay, I'm unmuted now. Yeah, I apologize. I may have missed this up front. I think what we're looking at in the city of Madera and perhaps in the city of Chowchilla as well, these list of projects, it's a mixture of projects. Some are in Measure T and some are not. And what makes me ask that question is the use of COVID funds and the LTF, Local Transportation Fund, the quarter-cent sales tax. I think that sales tax is administered by MCTC and not MCTA.
Right.
Is that what this is? A list of mixed projects?
So most projects, infrastructure or road projects, are usually funded with more than one funding source. And I believe they're just talking about the projects that are receiving Measure T funding.
Okay, thank you.
Anything more, Mr. Metz?
No, that's it on this set.
Okay, thank you. I have one question on the sinkhole that swallowed the trailer. So I'm just curious, does the city have any, contingency funding for unexpected emergencies like that? And what's the extent of the damage and or what's it going to cost? Have there been any estimates? And how would that factor into Measure T funding?
That's a great question, and I think Nicole probably be the best to answer that one.
Well, thank you for your presentation.
No, thank
It's
you.
good.
I don't know specifically of any contingency funding, not to say that we don't have any. I don't think we have anything as a specific contingency fund, but we tap into various funding sources as needed for these type of things. With it being a sewer failure, I don't think there's any Measure T money. It's also, I think that's a county road, so I don't know if that would even be usable with our jurisdiction in that particular area. I don't think we have any estimates for the repair. There is a project ongoing to replace that segment that actually the bids have closed, I think, 2 days before the first sinkhole happened. So that is actually why Ellen's not here to have a special meeting tonight to approve the contract to do that planned project and also tackle the sinkhole at the same time. So I know they were working on it, the second one the other day. It has complicated things a little bit more, so I don't think they have gotten estimate yet. They're having meetings today and tomorrow, so I think we're still working on that.
Well, thank you. We're glad you're here to address that.
Yeah, and if I can just add on to that, thanks, Nicole, is they had a planned project for that area, the sewer project, which means they'd have to trip the road and fix the road. And perhaps, some Measure T could help with the road portion of it. That would usually come out of their street maintenance budget. But then they had some additional failures that occurred, which is basically expanding the project to even bigger than what is originally planned. And so these bid openings were for the planned project. And so it'll be interesting to see how they handle these additional needs.
Thank you. Very interesting. Any more questions? All right, Jared.
Good evening, again, Jared with County Public Works. Before I jump into my presentation, I was maybe just going to touch on your question there, Mr. Flanagan. I do know that the contract the city's getting ready to award is about a little over $8 million. So, but that is, I believe, for rehabilitation of a larger section of the sewer line, as Nicole mentioned. So, as far as emergency costs, I don't know. It's probably not cheap, but it is on a county road, so we're working together on that. Let's see. So, what would be something? All right, yeah, so, the update for the county, you go to the next slide, please. I always like to start off my presentation by saying Measure T works. See a lot of improvement projects there that we've completed, for the county, actually winning several awards through American Public Works Association and the American Society of Civil Engineering. So, you know, it's always nice to complete a good project and get recognized for that. It's definitely a morale booster for our team and our folks who work really hard on these projects. So, next slide, please. So I'm going to just kind of go pretty quickly through our funding scenarios and allocations, because I'd like to focus on some of the end stuff in the presentation. So this is our commute corridors and farm to market, also known as our regional. This is the allocation that was programmed for the 23-24 expenditure year. You can see there's several projects on regional routes, which is essentially a requirement for that program to be used on regional routes, so it cannot be put on smaller local type roads. Some of these are probably familiar because there are things that I covered in January presentation. You know, 6 months seems maybe like a long time, but in the construction and project world, that's not very much time. So, so a lot of these are looking familiar, but we go to the next slide, please. So our pavement management system, as Chowchilla and the city both shared, we also have a pavement management system that we utilize for evaluating and assessing the condition of our roads. We did our report and our first assessment in 2019, and we just recently redid our assessment of our entire network as well. And that final report is being finalized to present. And I'll talk a little bit about that in just a bit. But, you know, we program money out of Measure T to help cover the cost of that system and doing those updates. The Avenue 7 rehabilitation project, the one that Troy mentioned earlier, we used about 1.3 million of Measure T on that project. And we also used the SB1 local partnership program funding and also I'll just call it COVID money. That's whatever it's called. The 200 Road 200 Bridge project, it has been completed. However, we are still doing the mitigation work on that, which usually comes after the fact. That's the fun stuff we have to do with replacing trees and mitigating all those impacts for the project.
Where are you gonna replace a tree?
Oh, we'll find places. We have to. Yeah, sometimes they're replaced within the limits of the project. In other cases, we have to go to conservation, you know, conservancies and things to buy land or lease land to plant trees to put them back. And it's expensive, I can tell you that. It's a lot of money. Because usually when you're taking out trees and certain types of plants, you're replacing them, you know, 4 to 1, 5 to 1, depending on what they are. So yeah, it's a costly part of a project that a lot of people don't always recognize and see. The Midtown Connector, River Parkway Road, again, that project has been completed. However, we're beginning the mitigation phases of that, and we actually just got that project actually we actually were able to acquire some land right near that project and sort of make it a conservancy because it had a lot of trees on it. We were able to count those as credits towards our mitigation. But we still had to plant a significant amount of trees. So there's funding program in there for that. And so that's ongoing. The Avenue 25 bridge replacement is a project that is using federal highway bridge program funding for a bulk of the cost. And then we're using the Measure T money to essentially match the requirement for the match on that. And that project's under construction, nearing completion. And then the last project on the list there is a project that's been in the queue for a while. And it's Avenue 15 rehabilitation from Route 36 to State Route 41. That's kind of heading out towards 41 outside the Montelli Ranchos area. It's one of probably our third most heavily traveled roads in the county, next to Avenue 12 and Avenue 9. So that is in the design phase currently, and we're hoping to have that into construction probably not this coming summer, but the following summer. So next slide.
One question on that, Midtown Connector. What you mentioned you acquired some property. What property did you acquire and how did you acquire it? Was it eminent domain? Was it an outright purchase?
So there was actually several properties that we had to work on acquisitions with that project. For the most part, they were all okay. There is one property that we actually had to acquire an easement, just a temporary easement to go on and do work. Unfortunately, that project or that particular property did go into eminent domain. Spent a lot of time trying to negotiate and get to an understanding of that. But we have limitations. I mean, we cannot just pick a number and offer that to a property owner. There's a process, there's a fair market value, appraisals, all those things that have to happen. And so we go through all those processes. That particular, the Midtown Connector project, actually had some involvement with Caltrans because we were on the state route. So there were some other, factors that were played into that. But essentially, we were able to get all the acquisitions done with the exception of that one construction easement. I don't know that has actually even been finalized at this point. I'll just say it's in legal hands now. It's not in my hands anymore. But a portion of the property that we did acquire was for the mitigation is, I don't know how to describe it, but it's very close to the property. It's actually a site that has archaeological, significance. And so it can't be built on anyways. So it worked out fairly decent. It was actually the property that we were looking at the original alignment for this project and had to shift it because of that.
So was the property parceled out? Was it,
no.
Does the county own the property?
Yes.
Okay.
Yep. We will probably own it forever because we have to make sure that, those trees and things survive and that, nothing happens to all the mitigation stuff that we're doing on it.
How much area are we talking?
I don't know exactly the size of it. I want to say it's maybe a couple acres.
Okay, thanks. Yeah. That's good.
I have a quick question. What about Avenue 17 and Raymond Road? Is that gonna?
Avenue 17 and Raymond Road. You're talking about Road 20.5.
Is that what it is?
I think that's
yeah.
Talking about the road that goes north up to 21.
Yeah.
Yeah. So that's actually, there's a high-speed rail project that's under construction.
Right.
Build a grade separation over the Santa Fe tracks and high-speed rail. And then they will build an extension that extends 17 all the way out to tie in the road 20.5.
Oh, okay, so that's their
there
project.
will be a connection when that's done.
Okay.
Yes.
And it's gonna stop there or they're gonna continue?
What's that?
Is it gonna stop right there on
17?
Yeah.
For now it is, yeah. There may be an opportunity in the future to extend that even further to the east and potentially go all the way out and tie into 145. That's a pretty massive project.
Yeah, so it's not in the works yet?
Yeah, and that's gonna take, state involvement as well, tying into 145. So, but yeah, there will be a connection. from Road 20.5, Raymond Road into the city of Madera via Avenue 17, once that project's done. And that is 100% funded by High Speed Rail.
Okay.
Yeah.
Oh.
Again, next slide. So this is the Avenue 25 bridge that I mentioned. Yeah, it's a full bridge replacement. You can see on the left, that's the picture that I showed in January. On the right, that's the picture as of probably about a week ago. We're on target, or we're hopeful to complete that this next month. You know, speaking of environmental things, we had about a almost 3 month delay in the project because we had a bird that decided to build a nest in one of those trees and shut down our operation for several months. So, never been so happy to see a hawk grow its wings and fly away. So they just got back to work on that, I think, like last week or so yeah, we're on track and hopefully going to finish that up here in a month or so. Next slide. So on our Safe Routes School and JAWS, or our local roads, you can see there we get about we have about $1 million program for just regular surface treatments, those chip seals and preventative type maintenance. And then we also have a miscellaneous road maintenance. One thing I would point out about this is when you look at this and you see the reserve for next fiscal year. So typically when we do our programming, we take that reserve as essentially equivalent to the allocation that we we expect to receive that fiscal year. And the reason why is because that money is not actually realized until the end of the year, because it comes in over the year. So we really can't necessarily say that we have that money to spend until the end of the year. So typically that goes into reserve and it'll carry to the next fiscal year in the program all project. So next slide. So some of the things that we utilize that funding for, we had a bridge on Avenue 18.5 out on the east side bypass canal that was significantly damaged to the point where we had to close it as a result of the storms in 2023. And so that required a detour to be put in place. The roads that detour follows are significantly in horrible shape. They are now, essentially having to carry far more traffic than they ever have, including a lot of the buses for the schools. There's 2 schools out there, Allview and Dairyland. And so we've utilized some Measure T funds to help improve that detour route for the time being. We do have claims into FEMA to get reimbursed for that. We cannot tell anybody, we don't know when that would happen. But the plan is to hopefully get reimbursed through FEMA money, and then that would go back in and be able to utilize for something else. We did also do a preservation treatment on Avenue 15 from Road 29 to Road 36. So that's the segment just before the one you see below it. That was just completed about a couple of months ago. Consisted of what's called a tire rubber modified slurry seal, surface seal. And that is a preventative treatment that helps prolong the life of the pavement. That segment there was rehabilitated, I believe, and it was like 2009. We did a rehabilitation project on that with the funding that Troy mentioned earlier, the American Rescue Recovery Act funding. And so, we've gone back now and done this preventative maintenance treatment to help prolong the life of that road so that it doesn't become even further deteriorated and requiring more cost to repair that. And then we're going to apply some of this funding in this category as well towards that rehabilitation for the next segment from 36 to 41. And then this funding also goes into kind of our general road maintenance. You heard both cities talk about how much funding they use for their just general basic road maintenance. We have a significant amount that goes towards that. And, I would say that coming here shortly, there's probably going to be a lot more of that money that needs to go towards our basic road maintenance, given the condition of our gas tax revenues. which I'll talk about here in just a little bit, but, essentially that goes to just basic day-to-day routine patching and maintenance that happens on the roads. Next slide. Supplemental street maintenance. This funding, is actually, designated for, in the county's case, for maintenance districts. So we have 132, I think, road maintenance districts in our county. We are the most road maintenance districts in the state of California. And these districts are roads that do not receive, and they're not in what's called our county maintained mileage system. So they don't receive gas tax funding because we cannot use it on those roads. So they're in a maintenance district, which essentially has their own assessment for the properties that utilize that road to perform their maintenance. And in some cases, they're very small, so they don't generate a lot of money. And so what happens with Measure T is we use Measure T money to help match to what they bring from the district to do treatments on their roads. So we've just put out a contract that is underway that will do approximately, I believe it's about 43 miles of roads within various maintenance districts throughout the county. If you go to the next slide. Yeah, so kind of hard to read, but that's a list of several of them. And you can see that basically there's a total projected cost or estimated project cost, and that 50% of that is being paid for with Measure T in each of those districts. I think they want more paid for that. Oh, I'm sorry. Those are surface fields. This is actual rate of capture overlays that would be done. So this is a little more aggressive treatment, a little bit bulkier. This work will likely be done by our road paving crew for these districts. Next one. So flexible funding and ADA. Flexible funding is impounded. We don't see that money that gets impounded and used for the regional program, which Troy will probably talk about. And then ADA compliance. Again, that's very little amount that comes into that account each year. And so we have been sort of banking that up for a project. There's not a lot of pedestrian facilities in the county. And so we are looking at doing some work up in the Oversight area along the school route to put some more sidewalks in, and that will include some ADA enhancements or ADA things that can be paid for with that funding. And then we also have, we're required anytime we do certain level of street maintenance or road maintenance overlays or what they call mill and fills. We also have to address all of the ADA facilities within the limits of that project. So when we do an overlay on a road, if there are sidewalks, curb ramps, or anything that are in the limits of that project, those are to current ADA standards if they aren't already. Next slide. Transit enhancement primarily is just being used to help offset or supplement the Madera County Connection public transit. I know it was mentioned, Chacho, that they're getting a bus. We are working on electrifying our fleet as well. But this first step in that is having the facility that we can charge those buses and actually be able to use them. So that's kind of been the focus for our transit program, is to get an electric charging stations installed at our all-in-yard facility, transit facility over here in Madera, so that we're ready to receive those and purchase those electric buses, and we can use them. Next slide. Environmental enhancement. So this funding is essentially required to be used on projects that improve the environment. And so for our case, you can see that we have the CMAQ, which is a congestion mitigation air quality funding. That's federal funding. That funding requires a local match on those projects. And so what we set aside this money for is to use as a local match on those projects. We have a pretty large group of shoulder paving projects coming up. In fact, one of those actually is out to bid right now. And so this money will be used to help pay for that local portion of those projects. I think I have, we'll go to the next slide.
Is that for dust mitigation?
Correct.
Yeah.
Yeah.
Okay.
Yeah, so we can utilize the CMAQ funding for shoulder paving for mitigating dust. We can also, it also has a safety factor, you know, in widening shoulders and having a paved shoulder on the road. And in our case, what we're doing is we're actually putting rumble strips in those shoulders as well to help have a shoulder rumble strip for another safety enhancement. So yeah, these are the two kind of groups of projects, 6 locations in each of them. It's a little backwards because the 2021 segments are actually the ones that are out to bid right now. Our 2019 segments were on a similar track to be ready to go out to bid, and unfortunately, environmental struck us, and we had to go through some studies and things to clear that before we can move forward with the project and get our authorizations that we need. So that's probably going to come next summer, unless we can get it out. Our hope is to get it at least done and through and authorized this year, but it's probably going to be late this year. So we'll probably have to push the construction to next year. One thing I guess I would just point out too is, you know, I know you've heard a lot about different funding sources. You know, every funding source we use has what I'll call strings attached to it. There's all kinds of more requirements that you have to meet, especially when you're talking about federal money. You know, just environmental alone, if you're using state money or local money, you have to clear what's called CEQA, California Environmental Quality Act. If you step in the federal world and start using that money, then you have to go through what's NEPA, National Environmental Quality Act. So there's a whole lot more requirements that come with using that fund, those funds, which, you know, sometimes, you know, for the most part, it works out. But there are times where you do have to look at it and say, is it really worth all the extra hoops and all the extra strings? Are you going to spend more money and doing some mitigation for using federal funding because federal requirements might be different than state? So it can drive up the cost of your project, even though you might be getting more money. It may not necessarily offset the additional cost. So those are kind of some things that we have to kind of deal with and work through as we're programming and going after funding for the project. So next slide. Okay, so current payment conditions. As I mentioned, go to the next slide, Sandy, please. As I mentioned, in 2019, we did our payment assessment. Our average condition was 44 out of 100, much lower than our city friends, but we also have, you know, an exponential amount more road miles. I guess the good news is in our 2023 pavement assessment, the recent one, our payment condition did actually go up a little bit. It went from 44 to 48, which, you know, doesn't sound like a lot, but I mean, we're moving in the right direction. We're not going backwards, which is really what was projected to happen in the 2019 pavement management program. So, I mean, I think it speaks to the fact that we are doing little at a time, but we're making progress. But you know, there's still a significant shortfall in funding. You know, it's not just a county or city thing. It's just about every agency across the state. In addition to that, more bad news, the gas tax revenue is going to decline significantly. And that's primarily due to the higher use of electric vehicles, and even more fuel efficient vehicles. You know, gas tax revenue has always been the source for road maintenance. And, you know, it's a great idea when everyone's driving cars and gas guzzlers and, you know, a lot of tax revenue coming in from that, but that is, you know, not the case anymore. Go on the next slide. This is just kind of a comparison of our road network. PCI, and it's broken by functional classification. So that's basically the way that we categorize the different roads. So arterials on the left are larger, high volume, high traffic roads that are more like regional. So your Avenue 9, your Avenue 12, 15, Road 200, things like that. So you could see that the pavement condition on those particular roads has gone up from a 51 to a 58. And that is really indicative of the board's policy that they adopted or essentially put in place in 2019 when we had that pavement management program, which basically said, we don't have money, not enough money to fix all of our roads. So how are we going to prioritize? And the decision was, we need to focus on those roads that carry the most traffic and we see the most travel on it and try to get those into better shape, so that we can then reduce the cost of having to maintain those or and put that money towards those collectors and miners. So that's kind of why you see there that the arterials went up pretty good. Collectors, same kind of thing. We made some improvements on that, but the minor and local roads have pretty much stayed the same because there hasn't been a lot of focus on that. Because those are your roads that are in neighborhoods and, don't see, they see 10, 15 cars a day versus your arterials that are seeing 5,000, 9,000 cars a day. So, next slide.
I got a question on
Yeah.
that, Jared. So am I to understand that there was a study done recently on the entire county?
Yep.
Okay, so was that study broken down into regions? For example, supervisorial regions?
The report will have some information on how the pavement conditions in the different board of supervisory districts look. I guess if you we will have data that shows how many miles are in each district and what the pavement condition, what the average pavement condition of that particular district is.
Is that report going to be a public document?
Yep, absolutely.
When's it going to be available?
Hopefully in the next couple months. We just got the draft. We're working through it to make sure that everything makes sense and that the information is all there and clear and understandable. And so once we have that finalized, it will go to the board of supervisors to present, and then it'll be a public document, the same way as the 2019 study is.
Thank you.
Next slide. All right, so what's next? Go ahead, next slide, I'm sorry. So as I mentioned, we'll have that 2023 pavement management program report hopefully here in the next couple of months available. As you've heard from the other agencies, we're going to have to continue to leverage every funding source we can. We and the county, and I know that cities probably have done this as well, we've tried our hardest to look at different technologies and methods of fixing roads. Some of the things you see in our cold in place recycling, full depth reclamation, these are not only environmentally friendly, but they're also very cost effective in the sense that when you're reusing what material you can from the road, as opposed to taking it all out and putting new stuff in, there's a pretty significant cost savings on there. I don't know. I mean, I know you live in Oakhurst, and we did the first cold in place recycling project we've ever done was on Road 426 from 41 to School Road. And if you've had a chance to see that, it's pretty impressive. It's a very, very large operation, but essentially at one end, they're grinding it up. It's going through a bunch of equipment. It's coming out the back and they're placing it right back on the road. And it's pretty impressive. It's very efficient. We are hoping to do that in many more, places. Conditions have to be right for it, but it is a very, very cost-effective way to do road maintenance and bring things back into better condition. I'm sure you all know that Measure T is set to expire here in the next couple of years. There is a renewal. You're not aware of that, but that going away is going to have some impact on our ability to to do regional projects, but also just our basic maintenance. Because as I mentioned before, with gas tax revenues declining, we're going to be looking for other sources to be able to do just our basic road maintenance. So that's going to be something that we have to consider. Next slide. So here, I kind of stole this from another presentation, so I'm not going to take the credit for it. This was actually a presentation that was done to the MCTC committee several months ago. But it was essentially the Road Charge Technical Advisory Committee, which is a committee that's been put forth to come up with a different way to fund road maintenance. I mean, that's probably the easiest way to put it. Understanding the gas tax, you can see in that graph that by, 2029, I don't know if you can read that, but basically it says $1.3 billion decline in revenues. So that's a huge, huge hit to our gas tax revenues. And so
Is that state or county?
that's the state. So that will translate into cities and counties. Everybody who gets gas tax money will be losing money. That's a significant decline, and put that with the fact that we don't even have enough money. We don't get enough revenue to do all the things that we really need to be able to do. And now, and then you're taking that much away from it. It's a pretty significant thing, and so this road charge technical advisory committee is put together to analyze that and evaluate what are some other options to essentially backfill the loss of that revenue. There actually is a meeting next week where they're going to take input from local agencies. They've already done one. They're going to do another one next week, where local agencies will be able to give input onto what this effect is going to have on our system, what's going to do for us in terms of how's it going to impact us for our ability to maintain our road network. So it's a pretty big deal. It's a pretty big concern. Especially for a county that has a pavement condition of 48. And I think you heard earlier the statewide average, I think, is about 65, 63, somewhere in there. So we're well below the state average when it comes to our network. To get there, it's going to take a huge lift, and probably a while if we have money to do it. So, next slide, please. So speaking of the new measure, I just kind of put these graphs up here. You may have seen some of the materials and websites information, but the current measure T on the left versus the proposed allocations on the right, you can see, I think the biggest thing is that the proposed allocations in the new measure would put about 80% of the revenues towards local streets and roads, whereas on the current measure, it's about 65. And I think, it's a huge boost into the local streets and roads in terms of how that allocation looks for the new measure if it were to pass. And I would say too that allocation and the way that that's laid out and how that's how those were put together was all the citizen steering committee that was put together for developing the Measure T expenditure plan. So this is actually citizens, people who came together and talked about where is this money going to be best used for improving roads in the cities and the county. So we'll see. I guess I will say we'll see what happens, and I think it would certainly help, but it's all up to the voters. Next slide. So that's all I have for my presentation. I'm available for any questions unless you've heard me talk enough, and then I can stop.
I have one.
Yeah.
Your sinkhole on Malum Ridge. Is it fixed yet? I didn't see it there at all.
Malum, 234?
Don't give me road numbers.
Oh, yeah. I think you mean, yeah, 234, yeah, sorry.
Malum Ridge.
Yeah, no, that actually is fixed, and it brings up a good point. We are, in addition to all what I went through there, what I didn't talk about is we have anywhere in the neighborhood of $3 million to $7 to $8 million worth of costs out at this point for repairs for storm damages from 2023. Repairs for storm damages, as well as all the operations that were put in place to remove snow in the mountain area. So we have expended a significant amount of money in the mountain area due to those storms and the response that was required to deal with that and then the aftermath. And again, all that stuff is hopefully going to be reimbursed through FEMA. You know, we're still going through the process of getting all that submitted and hopefully, you know, we hear some answers sooner rather than later. You know, and it's not an easy process to go through that. I know that people see on TV that FEMA people show up and say they're here to help, which I'm sure they are, but they are definitely not just writing checks to people and saying, here you go, here's all your money, go, you know, pay back whatever you need to or get what you need to. It does not work like that at all. So, so we're hopeful that we'll have a lot of that reimbursed, but most of the repairs are done. I think there's one, you know, significant road failure that's actually down here in the valley that has yet to be repaired.
I think the 3 questions.
Okay.
I wrote them down.
Okay.
I didn't want to interrupt you. So Avenue 15 rehabilitation, you're in the design phase. Is there like a plan? Like what? I take Avenue 15 all the time. So what is the plan for 36 to 41? Do you have a short answer?
Yeah, it's not going to be anything like adding lanes or, you know, making it huge.
You're just gonna.
It's just rehabilitating the road that's there and getting it into the, you know, back into a condition of a state of good repair, if you want to call it that.
No roundabouts. I hate roundabouts.
Well, not in that particular. No, it's just really, again, you know, the gas tax money, SB1, Measure T. I mean, you know, these are all programs that were really are supposed to intended to be to fix what's there, not necessarily make expansions to things. Now, I mean, the current measure does have funding in it for, you know, regional like expansion type projects. But, you know, as I was showing there, you know, 80% of the proposed new measure expenditure plan would go towards local streets and roads, which is fixing those. And then, you know, it could be used for regional larger projects, but that would not, you know, given the condition of our existing network, you know, we need to be putting money towards fixing what we've got as much as possible.
Okay. So then the next question is actually on the SB1 gas tax. I've heard for a long time that there's a possibility that the state will charge a per mile rate to drivers instead of the gas tax. So would that money go to roads? I mean, is there even any word on any of that? Because I thought about the same thing, like what's going to happen if the gas tax goes to the roads, what's going to happen to the roads when we all have to drive electric vehicles.
Yeah. Which is going to happen in 2035, because that's what the.
I'm going to rebel, just saying.
No, that's a good question. And that road charge technical advisory committee that I mentioned earlier, that's part of what they're looking at. And what you're talking about is what's called a road user charge.
Yes.
And they've done pilot programs on it.
Yes.
They've actually had people participate in it to see how it works and understand the things. And so there's data and information they have from that pilot that they're looking at. Okay. And they're looking at, you know, how well will it work? What are the problems? What are the challenges with it? You know, there's a lot of different things that are, you know, being looked at with that program. You know, disparities between rural and urban places, you know, privacy issues and how you're tracking cars and
driving out of state. Like, what if I go to Nevada? Like, that's a whole other.
So that's what this committee is really, you know, part of what they're looking at is these different options. I mean, there are states. I think Oregon already has a program that's in place like that.
I don't like Oregon, so I don't.
Yeah.
They also have a lot of roundabouts, so.
This is why.
Maybe
I
that's.
hate roundabouts, yes. And then my last question was actually on your little wheels, the comparison from the old Measure T, thank you, the old Measure T, the new Measure T. So admin has been added in on there, 1.5%.
It was just missing from that.
Oh, okay, I was just curious.
It's actually, I think,
It's going from 1% to 1.5.
yeah.
Oh, okay.
And I'm gonna talk about it here in a second.
Oh,
As soon as you do.
I'll shut up.
Do you have a question, online? If we're ready.
Sure, Mr. Metz.
Go ahead, Dan, you're unmuted.
Thank you. I just wanted to compliment Jared on a great report, easy to understand and very thorough. So thank you very much, Jared, for a good report.
Yeah,
And,
I will second that.
and one additional thing, wanted to compliment you on the improvement in the PCI and to encourage you to focus on local roads in the future, which remained the same from the last PCI to the current study.
Noted. I would love to fix them all, believe me. I understand. I understand. We're gonna keep chipping away at it as much as we can.
Thank you.
Anything else, Dan?
That's it. Thank you.
Thanks. Okay, is that it? No more questions?
All right, thank you.
Thank you, Jared.
Good.
Okay, item number 8. Flanagan.
Do you mind if we take a 3-minute break?
Sure.
Restroom break?
Yeah, no objection? Yeah, great. Good idea. Thank you. Sandy, is there another bottle of water handy?
Sure. I haven't opened it.
Oh, great. Got it.
Did you want? No, I brought my own. It's county.
I'm gonna do what you do. I'm gonna bring the ice.
Yeah.
That's a good idea.
I'm out in the sun all day long in the heat.
What do you do?
Electrical contractor.
Fun.
You do solar?
You know what? I try to avoid it.
Oh, really?
Yeah, avoid it. Yeah.
Just as a reminder, we're still live. We're just on a break. It's not.
Just don't talk about something you don't want all the public to know.
Well, no, yeah, and we can't discuss the business of the meeting.
Yeah.
I will make this as fast as possible.
Okay, are we back on? Item number 8, regional update.
Thank you, Mr. Chair. Just really briefly, we had this at our last meeting because we have new members and newer members. I just want to do a review and refresher of the Measure T program and also of the Citizens Oversight Committee responsibilities. We had this last time, but you heard some of this throughout the presentations. We have kind of these main programs, and then within the main programs, there's a few sub-programs. And so we have the regional program, which is regional projects. Those are usually the larger projects. They're usually a lot more expensive. And then we have the regional rehab projects that the agencies all talk about. We have street maintenance, which is part of the Safe Routes to School, and jobs is to a lot of street maintenance, and the flexible. So the flexible, what the condition was is for the regional program required a minimum 20% developer impact fee match for those regional projects. And if the agencies didn't have a program or did not collect sufficient funds to meet that required amount, then their funds were impounded and forfeited and went towards the regional program. And so for the city of Madera and the county of Madera, those flexible funds were impounded from day one because they either didn't have a program or they just were not collecting sufficient funds for those projects. And then we have the ADA funds and transit enhancement, environmental enhancement, and then the admin and planning. So you can see the current program, we have kind of all these small pieces of pie. And what we ran into is sometimes, for example, the ADA, they were getting so little money sometimes that they were hanging on to it for years because there just wasn't enough money to do anything with it, and they could only spend it on those type of projects. So what you'll see, and we'll talk here in just a quick second, on the renewal is to try to fix that problem. And so there's going to be less programs and more flexibility to the agencies to address the same type of projects, just in a more flexible, easier way to actually put the money in projects. Next slide. The Oversight Committee, the purpose is to inform the public and to ensure that the measure revenues and expenditures are spent as promised. As you know, we had some very hard questions today to the auditors and to staff. I appreciate hard questions. I appreciate the time that you put in to review those audits. Part of the purpose is to create an increased level of accountability for the revenues to ensure the program is functioning as promised. And then we have the 5 members from each of the districts and plus the 2 at large. You notice we are absent 1 today. One of our new members had I believe a previously scheduled, graduation, I think, event that they had to go to tonight, and unfortunately could not make it. But there are 7 members of the committee. Next slide. So as part of your action you took earlier today, you were reviewing and inspecting, and you were able to receive all the documents and audits. Also reports from our local agencies, and that's why we have them come and to talk about the projects. And then here in the next item, we're going to talk about your formal annual report. And so we'll have that discussion. Next slide. So really quick snapshot. Through May of 2024, we have received almost 171 million in sales tax revenues. Projection is about 219 by March 2027. As you can see, in these last few years is our biggest years, and so we're hoping to get to that 219 million. We'll see what happens. For the 22-23 receipts, that's what we reviewed today in our audits. These are sales tax receipts, meaning on a cash basis was 16.2 million. And the local agencies received about 8.3 million of that. And then we conservatively estimate that we've leveraged approximately over $320 million to date. We believe that that number is higher, but 320 is what we can document for sure. And so we're almost getting, 2 for 1 for every dollar Measure T that we collect. We're getting almost 2 additional dollars from other sources, from federal and state sources. Next slide. Just real quick on some of the projects. We already talked about the 233 interchange and the roundabouts. That is in the design phase. We're hoping to have some grant funding awarded by next year so that we can be in construction in the fiscal year 26-27. And then we have the State Route 99 widening, Avenue 7 to 12. You know, they're working on the bridge right now. They're Avenue 12. As soon as that is completed, they should be kicking off the widening from 12 all the way down to 7. So the construction and the mess isn't going to go away. But when it's all done, hopefully by 2028, I believe, is what the latest schedule shows. It'll be really nice. We'll have basically all the way from south of Fresno all the way up to Avenue 17 will be all 3 lanes. And we have, never had that. And so it's going to be exciting. It'll be a safer route, and also our goods movement will be more efficient. And then there's a couple of 2 Sigma Madera projects. I think one was talked about earlier, the Cleveland widening, and also have a Gateway Avenue widening project that are part of the regional program. Those will be coming online here soon. And at future meetings, we should have more details about those projects. Next slide. So let's talk about the renewal. Jared shared his graphic. I appreciate the graphic. Let me give you an update of where we're at. So earlier today, this afternoon, we had a special authority meeting where they approved the renewal, the 2024 renewal expenditure plan. As Jared indicated, 80% of the funds will go to local streets and roads. And there is a 10% set aside for disadvantaged communities, which is a first of its kind in the state. And so it's groundbreaking. We're actually excited about that. That it's never been done before, and we think that it's something worthwhile. And it came from our steering committee, and staff has 100% supported that effort. Next, a week from today, next Wednesday, we will have our regular meeting, and at that meeting, they'll have the second reading of the ordinance, and then they'll be taking action to request the Board of Supervisors to consider to place it on the ballot. And then that will happen at the July 2nd Board of Supervisors meeting, pending the approval next week to move forward with that action. But that's kind of the schedule of the renewal. Next slide. Just really quick, just some highlights of the new plan. It is also a 20-year plan. I mentioned 80% to local streets and roads, 14.5% to regional projects, 4% to transit, which is a doubling, and then 1.5% to administration and citizens oversight, community support. There was a lot of talk about increasing some of the abilities of the oversight committee to hire their own auditor. So what you saw today and what we had today won't change. But if the committee decides to hire an additional auditor to do an additional review, that will be an option that requires money to do that. And thus the change from 1% to the 1.5%. We'll also have language in there to increase the reporting requirement to make it more transparent and easier for the public. Right now, the information is out there and available, but we need to do a better job. And all this is to present it to the public. We need money to do that. And so that is why the 1.5%. There's still a state rule that says you can only have 1% for salaries and benefits. That hasn't changed. And so really the increase is to help pay for some additional auditor, maybe some consultants to help with the reporting aspect of it. And particularly, and also some salaries as well, but we still have that 1% limit. As I mentioned, the enhanced measures for the Citizens Oversight Committee. Next slide. Is that it? All right. Any questions?
Yeah, on the COC, if they're going to allocate set aside, if we need an auditor or a CPA to come in and advise us, would there be any conflict? Because we could use that this year.
Mm-hmm.
Would there be any conflict with the Brown Act? Could we all have a meeting with the CPA that is outside the Brown Act, so we could discuss the business of the audits?
Whenever you have more than, if you have a quorum of the members, then the Brown Act provisions would apply, it would be
Right.
considered a public meeting.
Yeah.
And so we'd have to make sure we stay within that. What they could do is to appoint like a subcommittee of 2 or 3 members. And so actually the going to be 2 because the new committee, if this is approved and takes effect, the new Citizens Oversight Committee will have 5 members and not 7. And we'll have 5 members with 1 alternate for each. And so in case one can't attend, there's an alternate to fill that place.
Really?
So 1 for each supervisor district. The steering committee also, I believe, I didn't cover this, but they really liked your recommendation, Chair Flanagan, about how the members are selected. And so it's proposed in the new plan that the COC chair, MCTC rep, financial rep, which currently would be me, and then one additional third-party mutually agreeable person that would have experience in citizens oversight or government oversight and accounting to help decide those selections. So people would apply, and then that 3-member panel would select and make those recommendations of who should be the members of the committee. So that is a change from the current measure.
Yeah, I thought we just saw a slide that it was still, the COC was still 7, 2 at large.
That is the current. What I was showing, that is the current. Yes. So that would be a change in the new plan.
That's surprising, and personally disappointing, but.
You mean as far as the number?
Yeah, I see that as, the supervisors have a lot of control. There's 2 at large, I think April and myself, who we represent everyone. And they're taking that away. So, we'll discuss that at a later time.
Yeah.
But that was approved today?
So the plan was approved today, and so next Wednesday is the kind of the final approval of the ordinance, which the plan is part of the ordinance. And then the action to send it to the county to place on the ballot. So really next week is the kind of the last chance to make any changes. So I just want to clarify that the Board of Supervisors or any other of our board members wouldn't have any say on who would sit on that committee.
Right.
I mean, they would approve the recommendations, but they're not selecting the members.
Right, but you lose 2 important seats.
And that was all, I'll just say that was a discussion on this steering committee, at length. It was discussed.
Yeah. One thing I did recommend on that procedure with the financial guy, the chair, the current chair, and then the third party has to be mutually agreed upon.
Yeah.
It's a good way to do it. But there's no mechanism in the draft I saw that if we can't agree, what then?
So what would happen is that those would be determined as part of the bylaws and other administrative procedures that can be determined at a later date.
Thank you. Yeah, good answer.
Yeah.
Okay.
Yeah, which is pretty normal. That's pretty standard.
Yeah,
Is we would have, we don't have to figure out all the administrative procedures right now. It's just the plan and the policy, and then we can figure out those details of how it would work at a later date.
Okay, and the COC would have input in the development of the bylaws, right?
Yes, they're going. The COC will develop their own bylaws.
Okay.
Yeah.
Who's going to help us with that?
So it'll probably be staff and a consultant, with working with the committee.
Good deal.
Yep.
Thanks. Anything else?
But the committee will adopt their own bylaws.
Okay.
Which we don't have right now. So that's a good thing.
But it makes sense. It answers my concern about, if we can't agree, if we simply can't agree, what then? And so
the bylaws would have those rules.
Yeah. Pull a name out of a hat. It could be that simple, or preferably not.
Yeah.
Okay. Thank you, Drew.
Any other questions?
Oh. I don't know if it's in regards to that or not. And we only have 2 meetings a year?
So you actually, that's something I didn't bring up, is in the new plan. There will be 4 meetings a year where we'll meet quarterly. Because, and I said, well, what if we don't have anything to talk about? And they say, well, we're always receiving revenue every month, so at least we'll have that to talk about. But if there needs to be, that means canceled because there's not enough to talk about, or or we can't get a quorum, then the staff would work with the chair to cancel the meeting.
Sure.
And then we would have a standing scheduled every quarter, like probably, first Tuesday of every quarter, quarterly or whatever it is, whatever the date and time is, that would be determined on the bylaws when they would meet on a quarterly basis, and it'd be like a set schedule.
Yeah.
Yeah, thank you for bringing that up.
Yeah, good question. Okay, so we're coming up to agenda item number 9. You're all done?
Which is the meat and potatoes of why you're here.
Yes.
Be presenting this.
That's part of this?
Oh,
yeah, the very last page.
Yeah, I was trying to make it larger.
So there's two parts of this. One is the actual letter, which is the COC's report. But we want to talk about something even, grander than that. I'll turn over
Yeah,
some.
so in your agenda packet is the draft letter report, which will be, if agreed on by everyone. This is what we publish in the newspaper. We publish it online on our website. We put it on social media. But what we would like to do is enhance that this year, and we would like to make it about 4 to 6 pages of a colored graphic, and we would be taking the information that we received today from the jurisdictions about projects that they've completed, projects that they have plans, and put pictures in, so it's very readable, eye-catching. So, people will want to read it. It will list your names and what what areas you represent. We're going to have a couple of different tables in there about money that was spent in certain areas for the whole program this last year. Troy, maybe possibly a message from the chair that we can work with you on that, if that is something that you'd like to do.
Yeah.
Okay.
So that's not going to be published in a newspaper or 4 or 5
No.
pages. It's a website.
This will be published in the newspaper.
Yeah.
Per the, I guess, the code.
We have to
Yeah.
publish that.
We have to publish this, and of course, this will be in it as well.
Right.
But we would like to add projects and, everything that's been accomplished this year and projects that are in the works. So the public, is more aware of that. We're working on the graphic designs right now. We're not graphic artists, designers. So it's we have a little bit of a learning curve here. But we should have that done by the end of the month and ready to be published in July. And we will circulate that so you can see it.
So how could we approve that then? Tonight, we have this to approve.
This is the approval.
Okay, but then how can we approve when you have a draft ready for the enhanced report?
That'll be more like a newsletter type of document. I don't know, how do you want to do that?
Yeah, that's a good question.
Yeah, because this is what has to be approved.
Right.
Is this.
Right.
So some options, the action today is to say, yes, we approve this with whatever changes you want to make, if any. And then the motion could be direct the chair to work with staff to finalize the report, and then that we would circulate it to the full committee for review and comment before it's released to the public.
Yeah, that would work.
But what you're
Send it by email.
what you're approving is your report.
Yeah. Yes.
Yes.
Yeah.
Yes.
Okay. So where's that take us now?
So
You
the
want to
report, yeah, so
just review it?
so the report at the bottom is basically the signatures of each of you saying that you have that you reviewed everything and that you're in agreement. However, we don't have our representative from District 5, Russell Shaw, here. He's not in attendance tonight, so we would remove his name from this because he wasn't in attendance at the meeting.
Okay, so has everyone had an opportunity to look over this?
Does this affect the numbers you were talking about
What's that?
during the meeting?
Yes.
The presentation, you had questions about some.
Yeah, so the numbers in here should match the revenues on the financial
Oh,
statement,
thank you.
but not necessarily the cash receipts. Because cash receipts was 16.2, and I'm saying 15.99 because that's the accrued revenues on the financial statement. So that number does match what's on the financial statements. We had that question last year, and I tried to make sure that everything was consistent with what we changed last year.
This is far more inclusive than, you know, what I've seen in the past, so I guess if everyone's read it, if you have any questions, do we have any questions about this document? No. Is there a motion?
I move to accept the audit report.
Yeah, you're gonna approve our COC report.
Oh, COC report.
And is there a second?
Yes,
Who was that?
that was me.
Okay, sorry. Good. All in favor? Aye. Unanimous. Thank you. And that brings us to pretty close to,
Where we at?
we're on,
Next meeting.
number 10. Yeah. Proposed meeting schedule. I'd like to get on a schedule and keep it, you know, and the June is right before the end of the fiscal year.
We got
That-
off schedule
Oh,
because of
yeah.
late audit.
Yeah.
Last year.
That would bring us into December, and I'm not unopposed to that. I mean, or excuse me, I'm not opposed to December, but I'd like to throw that out to the committee because it's balanced there, you know, 6 months.
So, traditionally, and we can hold this meeting in December, it's very difficult to obtain a quorum, just because of the holidays, people are wrapping up their
Good point.
year at work.
Grandbaby's gonna be born.
There you go.
Yeah, okay, I get it.
Yeah, and, we generally don't even have a board meeting in December,
So
just because
maybe
we don't have a lot of business.
sometime before Thanksgiving, you know, in
Yeah, or
November
January.
or January.
First part of January.
Yeah, I have January 8th is the second Wednesday in January.
January is the reason why I couldn't come
Okay.
to the last January. It's just unpredictable.
The weather is unpredictable.
Yeah.
The next second Wednesday would be February 12th. And we do need to schedule around city council meetings as well as board of supervisor meetings. That's why we have this night.
I don't want to say January's out. I'm the only one that lives up there, and
No, and that's understandable. We need you to participate. Yeah.
But
Yeah.
it's sometime February, you don't know?
Yeah.
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 Can we go June
December, the
and
same thing.
June and January, and if it snows, then it snows. You know,
We'll just get that guy out there to plow the
There you
roads.
we'll bring a snowcat up and get me up. Okay, is that, are we in agreement on that? Does that require a motion for the schedule? Okay,
That was January what?
January 8th, which is the second Wednesday.
Good.
5 o'clock.
25
Yeah.
already.
My husband's getting old.
I remember Y2K sitting there. Here for Y2K. Here it is 25 years later.
Oh, my God.
All the computers are inside.
yeah, we're almost there. Agenda items for next meeting?
It would be a report from the local agencies. It'd be a report of the election potentially, if this makes it to the ballot for the renewal. We'll have a report of that.
Yeah.
And then just regional update. It's really an update meeting.
Yeah.
Is what it is.
Okay. I think my term as chair runs through, or at least into January 8th. So if anything came up that the committee wants to place on the agenda, just work it through me and I'll get a hold of Sandy. Does that sound okay?
Thank you.
And then item number C, items from committee members. Who wants to go first?
think I've been up on all of my stuff already, because talking about the dates or how many
Wayne?
years.
I have none.
Max?
Nothing.
Hey, no, I just would like to say briefly, good work. I think this report, the annual report includes a lot of stuff that people are gonna want to hear, and I appreciate that. Looking forward to working with you guys on the publication for the webpage.
Yeah.
You know, that's all. Thank you for staying up late tonight. And so we have a motion to adjourn the meeting.
I make a motion during the meeting.
Is there a second?
I'll second it.
All in favor? Meeting adjourned.